Hello, everyone, and a very warm welcome to today's cryptocurrencies update for Friday, October the 4th, 2024. We're doing this update a little bit earlier because there is actually no point in waiting. The main question is to be wave or not to be wave. That is the question. Are we in a smaller B wave and we'll see lower prices once again? Or is the low for the B wave that we were tracking of the ending diagonal third wave, which will subdivide into A, B, C, with that B wave potentially complete? That is the question. So we're going to go straight to the charts. These are all the slides for your entertainment, so to say. Never, ever forget the importance of stop losses. I can't hammer it home often enough. And please remember, there are many ways to make money. My short-term ETF trading alerts are up 40% for the year so far. That beats Bitcoin, I think, by a big no, it's almost equal. Actually, Bitcoin is about equal. It's also up 40%, so that's about the same. Ethereum, for example, 2% up for the year, so that would be a total disastrous miss. Cardano is down 43% for the year. Avalanche is down 37% for the year. Binance Coin is up 76% for the year. Link is up, no, down 28% for the year. Matic or Polygon is down 62% for the year. Solana is up 30% for the year. So you can see my ETF trading alerts beats most of these cryptos. As I already said in previous update, we can rewrite Cardano's ADA to POS. Same for Avalanche, by the way. I'm sorry about that, but if it doesn't work, it doesn't work. Then we focus on something else. Anyways, let's go to the charts and see what we have. Let's start here with our preferred wave count. This is what we projected already here somewhere around mid-September on this breakout, that we would go here to about 65, 66,000, and then a decline to initially, ideally, somewhere around 60, 61,000. Just based on that, we thought we wouldn't go as high as we did. And of course, if we go higher, then also the downside can be extended a little bit because there's more room to fall. But as you can see right here in the ideal target zone, I think that's a nice 62% retrace. So technically, all of wave B can be considered complete. We're rallying back out of the target zone. That's often a good sign. Just as we saw here, this was the ideal target zone for this wave 2. And this is then potentially wave B. I do have to be honest and, of course, provide question marks, because we don't know yet with certainty if these are indeed the A and the B of this C wave, which will then make this third wave of a ending diagonal. 3, 3, 3, ABC. 3 for 4, 3 for 5. That's how we're going to advance anywhere between, I would say, 78,500 to about 84,500. We can always extend, but for now, that's our preferred path. And the warning levels for the bulls have, of course, now been lowered. So the first warning level is pretty much today's open, which was yesterday's close, which was the day before's open and the day before close. So that's a critical level, as you can see. The second warning level is yesterday's low. The third warning level is this B wave low, because then we start to retrace quite a lot of this entire A wave rally. And it is still possible, but then chances increase that we have to go to the bearish alternative, which we still cannot take off the table. With the final warning level, the September 6th low. Below that, we're going to go to the mid 44,000s. And I've seen several other people project that as well if we do see that breakdown. They're not saying we're going there. That is the potential that's in the chart. For now, of course, we are still above the Ichimoku cloud. So that's really good. We're holding the 50-day simple moving average. That's really good. But we're below the 10 and the 20-day simple moving average. And that's, of course, not good. So we need to break back above the 20-day moving average. If we can do that, or the 200-day moving average, sorry, then I think we have a bigger chance that this bearish potential as shown here is not going to unfold. Now, as I wrote in yesterday's email, this can still be a B wave of this B wave. Remember, B waves comprise 3 waves. And so far, the decline that started last Friday looks like a simple drop. Okay, no subdivision. So that could really mean that we only completed wave A. We're going to rally back to about 64, 65,000. just kind of get us back above the 200-day moving average. And then we drop one more time down to about 58,000 plus or minus 500. And from there, we'll do the C wave. Okay, so this is still possible. So the warning level for the bulls remain almost the same. I've just lowered them slightly for this wave count. Okay, as you can see here, the first warning level is now at 60,000, instead at about 60,500. The second warning level is now not at yesterday's low, but at this B wave low at 57,500. The third warning level has also been lowered, in this case, to about 56,500. And then, of course, the final warning level remains the same. So this is still very possible, A, B, C. And then we move higher. So as long as we stay above, of course, the warnings levels, we're fine. We can allow for this to take place. So far, so good from a forecast perspective. We've bottomed right here in the ideal B wave target zone. No surprises. This is as good as it gets, in my humble opinion, from a forecasting perspective. So far, I've only seen one other person now suggesting an ending diagonal fifth wave on X. It is a person I think had 600-700 followers. So I already lost the tweet. I couldn't re-find it. It's so far the only one that I've seen. All the other ones are either keeping it secret to themselves, hiding it very well, or they don't see it yet. Just wanted to point out once again how early we are so far in identifying this ending diagonal, because normally you won't really get there till we are pretty much here at the C wave. Okay, then you really go, okay, we just made a new all-time high. Aha, it's ending diagonal. So this is really, really early. Okay, and I pride myself in it, but I don't want to pat myself too much on the back, because I know the market will humble me quite severely if that's the case. And as I always say, I'm only 70% reliable. So if I've been reliable for the last 100 days, there should now become 30 days unreliable, right? It's just pure statistics, right? We're speculating. If you trade or invest, you're speculating. And speculating doesn't mean we're betting on certainty, because there is no certainty. That's all we're doing, speculating. All right. So that's then the alternative for the ABC. Okay. Cannot take it off the map yet. That is what I already said yesterday. This could be a subdividing, protracted orange wave B and then wave C. Still nothing wrong as long as we hold above 55,500 and definitely, of course, above the September 6th low. That's the ultimate line in the set. Because if we kind of bottom out here, of a top out at 65,000 for this either B wave, it can also be a second wave. Then we had wave one, a wave two. This does look like an impulse. Not really. I would say Wednesday's bounce is a little odd for a impulse, kind of like looks more like a B wave, but it's fine. Could be one, could be two, could be three, four, and five. Okay. So this one, of course, front and center once we break below September 6th low. And once we break below it is, of course, a big fat if. We're still above the Ichimoku cloud. We're holding the 50-day, and we're right here knocking on the door for the bears' first warning level. Haven't changed that one. That was, of course, Wednesday's high, and that was loud and clear outlined in yesterday's email. So that's good. Again, the RSI 5 on the daily time frame got pretty oversold, like it did many times this year, and those times have often led to, at a minimum, a multi-day bounce. Okay, and so far so good. So again, 65,000 seems to be the next target zone at a minimum, and at a maximum, I would say 78,000, something like that. Okay, that would be somewhere we're looking for. But 78,000 will only be on the radar if we break above last Friday's high. That's about 66,500, somewhere around there. If we break above that one, then we're going to look here for 78,000. Let's make it again 75,000 plus or minus a couple of thousand. So those are the three main options. I know it might be quite confusing, but all options for now are looking higher, contingent on holding above yesterday's low. Very simple. The wave 2 is looking for 64.65. The wave B is looking for 64.65. The wave C is looking for anywhere between 72 and 78,000. And I prefer the 78,000. Okay, so very simple. That's what we do. All contingent on holding above yesterday's low. And first warning is already, of course, at today's open. All right, I'm going to look now for the ETFs that cover Bitcoin. And in today's webcast, we only cover Bitcoin because everything else, as I already showed you, are essentially POSs. Okay, very simple. Even Ethereum at this point does not pique my interest whatsoever. This is IBIT, I believe, or BITO. What is it? IBIT, yes. So this looks still like this nice, clean leading diagonal first wave. This was the target zone for wave 2. And so far, so good. We did a nice 50% retrace. I had it a little bit higher originally from 38 to 61.8, but that's fine. We're right here in the middle. 50% retrace of wave 1, quite normal. And the warning levels for the bulls from the previous update are still in the chart. I'm going to now, of course, update these ones because we've gone lower, but we haven't even broken below the second warning level for the bulls, let alone, of course, the third or the final fourth one at the September 6th low. So we're going to then update these warning levels. The first warning level is then, of course, today's low. The second warning level is then about yesterday's low. The third warning level, I would probably raise to about here, and then the final warning level remains there. Okay, so these are the warning levels. And we so far have still a nice impulse underway there. A 1 and a 2. This also looks like a leading diagonal, more of a expanding kind of point of view, but it's okay. Then a irregular flat wave 2 lower, A, B, C, and its expanded version. 1, 2, 3, 4, 5. And then another leading diagonal 1, wave 2. Can always subdivide, just as I showed you here for Bitcoin. So for now, it is still a question mark. And of course, a break above last Friday's high. I believe that's last Friday, right? So this is Thursday, this is Wednesday, this is Tuesday, this is Monday, Friday. Yeah, last Friday's high. And I'm going to look here for about 46.5 for this wave 3. Okay, and that's only 3 of 3. And then ultimately somewhere around, let's see here. Let's see what we get. 49.5 for, let's make it 49, somewhere around 49 for this wave 5 of 3. Okay. Contingent on holding above these warning levels. Otherwise, this was just a A, B, C. Okay, that's why it's question marks. Just as I showed you here, A, B, C. This was then pretty much a flat wave B. Same for then, of course, IBIT, A, B, C. Question marks remain there, but we're holding above the Ichimoku cloud and the 50 and 20-day simple moving average. I like it. All right, let's go to BITO. BITO, it is the Pro Shares Bitcoin. And this one I like because it pays out a dividend. And I've shown you the dividends here since March. It started here at 35 cents, goes back further in time. And it fluctuates. Why? Because they're pretty much rolling their options over always to the next month. And they're not allowed to make a profit. So then the profit is shared with the shareholders, right? So that's why it's a share. And as you can see, these are the monthly dividends you get. So let's say, you have 1,000 shares, you get $1,000, all right? This time around. Previous month, you got 1,200, etc. So it's a nice dividend. While nothing happens, you can do some cash flow, right? There's always ways to at least make some money. Now, we start to see here this large triangle forming. And it reminded me of another large triangle I've seen before from my gold, silver, and miners service. Highly recommend signing up because these ones have, of course, been ripping the whole year, right? Gold and silver have outperformed pretty much every single asset class in the market, even, of course, the regular stock market. Let's see, I think the silver trust is up 35%. All right. Gold is up year to date 28%. For a boring asset class as gold and silver supposedly are, they've done amazingly well. Please pay attention to oil. Hint, hint, nudge, nudge. And when oil goes up, inflation comes roaring back. Never mind. That's a side note. This is the silver chart, and I've not changed a thing. I recognized a triangular pattern, symmetrical triangle kind of form. And then if you see a breakout, you always at least target the width of the triangle, and that would be at 32 for SLV. And so far, we're getting close. We've already reached 30. Not too bad. It won't be a straight line. Markets don't move in straight lines. And we can even reach 38, depending on which triangle we're currently fulfilling its promise from, so to say. So this is the triangle. And if I look at BITO, I see similar triangle here. So the first triangle targets 24, and the second triangle 29. You see it? It's of course not exactly the same, but it's the same type of pattern. So BITO can target 24 to 29. Wouldn't surprise me, as this still looks like we're in a 1 and a 2 and a 3 and a 4, and we still need another fifth wave to go, at a minimum, one more fifth wave. This is, of course, always contingent on holding above the August low and the September 6th low, right? And as such, we have similar warning levels. The first one is at today's low. Second one is at yesterday's low. The third one, I would say, is probably the September 6th low, and the final one is the August 5th low. If we start breaking below those, all bets are off. So this is the final warning level. And of course, if we break below these, right, we've already broken below this potential uptrend line. It's still uptrend line that's potential because it hasn't been proven anything. So that would be the third warning level. And then I would say the second warning level, I don't want to see it go below yesterday's low. I want to see the low in place there. I'm just going to be aggressive. And then, of course, the final one is today's low. Why? Because we're holding these moving averages, etc. So that's what I'm seeing. But as you can see, we still have some ways to go. We need to break above this trend line here, which is currently residing at around $19 and declining. So by the time we're at the end of the month, we're at about 1850, 1875-ish. Okay, so this is something to keep an eye on. Again, it looks quite similar to SLV. And as an analyst and analytician, you need to recognize patterns. Stock markets are full of patterns. And your mind needs to be a walking encyclopedia of price actions you've seen before. Ending diagonals in 2011, from the stock market, I still have saved them. Impulse crash down in 2020, I've saved them. So if I see anything similar, I can apply that to the current price action and put it in the right perspective. And that's the power of technical analysis. And again, technical analysis always subjective. Elliott Wave is subjective because in the end, it's a human who does it, and you're interpreting the price action. And some people then have a hard time applying that, but trading itself is, of course, subjective as well, because you're speculating. So we can never be entirely objective, okay? So the most objective thing to do is, of course, have a algorithm-based trading system that's mechanical, it's price-based. That is very, very objective. But it can never predict the future. Most of the time, those are trend following. And most of the time, those patterns then are based on previous patterns. It doesn't have to recognize the patterns. But in previous setups, of course, they resulted in gains. And then this current setup should also result in gains. No guarantees, of course. Bottom line, the current price action in BITO looks like that of silver. Of course, silver was on a much grander scale. This was multiple years. And here we're pretty much talking multiple months. But that doesn't matter. It's a similar type of pattern. Targets 24 to 29 on a breakout, contingent on holding, of course, above ultimately the August low for sure. And again, this price action still looks corrective to the downside since March, whereas it looks 1, 2, 3, 4 impulsive to the upside. So that's what I have to share for today. Let's see if we have completed all of Wave B and are now ready to rock and roll for the final and last time, so to say, 2 new all-time highs, or if we're going to see one more little squeeze before we lift off. And if we don't see the squeeze and we drop below September 6th, I'm going to look for about 45,000. CSA targets 45.5. There's some other important levels here in the low 40,000. So we can always extend, of course. That's what other people are seeing as well on that break lower. And same here for IBIT. as long as we can hold pretty much yesterday's low, break above last Friday's high, we're going to look for the high to mid 50s. And BITO needs to break out. All right. Meanwhile, while BITO doesn't do too much, you can still get a nice cash flow on a dividend basis. Just want to point it out. You decide what you want to do. I think it's a nice way to get some cash flow while nothing's happening. Meanwhile, always keeping an eye on the warning levels, because at some point $1 per share in dividends can't stand against a $20 drop in share price, I would say. You know what I mean? Take care, trade safe, catch you all next week.